Good morning, guys. Happy Friday. Cheers to that. So why don't we get into the stories here? Oh, by the way, my name is Sebastian. Today we're going to talk about Bitcoin dropping. I talked a little bit about it yesterday about that there was a possibility that it could drop. We're also going to talk about Micheal Saylor buying more Bitcoin. He had a press conference, not a press conference, but he had a, what did he have yesterday? He had his earnings call yesterday, and he was talking about buying more Bitcoin in the future. Ethereum is looking to go to 14K. Litecoin is now accepted at BitPay, and we have something more, a little bit more important to talk about towards the end of the video that I think everybody should pay attention to it. So when we get into it, first of all, if you would subscribe, it would help me out a lot. Then hit the like button. It helps out the YouTube algorithm, helps the channel out. It'll help me out tremendously, and that's all I ask from you guys. I don't sell you guys anything or anything like that, so that's just my little plea for help. So let's get into the charts. So Bitcoin, we were talking about it yesterday, where it was trading in a range between, what was that range? Right around 39.5 and 40,500, 40,200, right around that range. Yesterday I said that if it doesn't go above that range within the next couple of days, we may see a drop down to 36,000, and we saw a drop within the last 5 hours. 5 hours ago, it dropped down to the 200-day moving average at 38,000, $588 roughly. So it dropped down to that. It bounced off of it a little bit, dropped again, and it's been bouncing off of it currently. The RSI is showing that it is a little bit oversold, so we'll see if it drops any further down to the 36,000 mark. We'll have to pay attention to it. Doge is doing the same thing. Everything's dropping along with Bitcoin. Stellar, Litecoin, doing the same thing. Cardano, same thing, it's dropping. Ethereum is doing the same thing. It dropped. It's now at 2,340. But this one looks like it can go a little bit more down on the RSI chart, so we'll have to see. Doesn't look too good right now for Bitcoin starting out the Friday on the weekend here. We'll see if it can bounce back or if it's going to drop down to the 36. So let me know in the comments down below what you guys think, if it's going to drop or if it's going to go back up. I'm looking like it's might drop down a little bit more. The Bitcoin shorts, the bears, are up a little bit today. They're up to 2.19% for the day. So it looks like they're getting a little anxious to see maybe Bitcoin drop a little bit. So we'll see. Time will tell, as always. Do your due diligence when investing. So Micheal Saylor with MicroStrategy, at his conference call with investors, said the following. Speaking during a live video call with investors Thursday, CEO Micheal Saylor and CFO Phong Li struck a defiant tone at a time when the mainstream press has taken aim at the firm for its focus on accumulating Bitcoin amid its recent market downturn. However, Saylor appeared unassuaged by criticism, stating, Our macro strategy is to acquire and hold Bitcoin. We'll help explain Bitcoin to the regulators, to the public, and to the media. We think acquiring Bitcoin at this time is going to be a wise move. We feel there is a land grab right now to acquire as much as we can, he said. Elsewhere, Saylor said he was pleased with the investment. To date, the firm has invested over $2 billion in Bitcoin, while describing an improving economic environment for Bitcoin despite negative news catalysts that have seemingly deterred retail investors of late. Yeah, I mean, we've definitely had a bounce back from the lows on Bitcoin, and he's been buying the dips. So he should be pretty happy with himself. I mean, they've been buying ever since, guys, probably right around 15,000, 20,000 with Bitcoin. So they're quite up on it. I don't know how much they are, but it looks like they hold roughly 4 billion. So if they spent 2 billion, they're up 100% already on it. I mean, that is just outstanding. All right, let's get into Ethereum next. So Ethereum price can hit 14K if March 2020 chart fractals hold. One trader spotted the fractals, which employs 3 classic technical indicators to predict an upside trend for Ethereum. So Ethereum price fractal first spotted by user Trading Shot. The Ethereum fractal involves 3 technical indicators: a 50-day simple moving average a Fibonacci channel, and a relative strength index RSI. Ether closed above its 50-day simple moving average in July 2021, the first time since the May 2021 bearish correction. As Trading Shot noted, breaking above the said moving average wave historically predicts bull runs. For instance, a run up above the 50-day simple moving average in April 2020 took the Ethereum USD exchange rate from around 170 to over $500 in September 2020 in only 137 days. New all-time high anticipated. Trading Shot recounted multiple instances based on the April-September 2020 fractals, each showing Ether closing above its 50-day simple moving average and rallying higher inside the Fibonacci channel, while its RSI wobbled between neutral and overbought levels. The same is happening in July. Interesting. So here's where he's saying it could go up to approximately the 1.0 level on the next big leg up. Could have Ethereum test 4,000. Meanwhile, an extended uptrend could have the pair reach 1.5 and 2.0 Fibonacci levels, which coincides with $6,000 and $9,000 respectively. That would be outstanding. All right, but Trading Shot noted that on each rally after closing above the 50-day simple moving average, Ether's upside target progresses one level higher on the Fibonacci scale. Therefore, the current cryptocurrency's next price target may be at the 2.5 Fib level, which is above $14,000. I mean, if we're looking at by the end of December, holy cow, if that's at 14,000, can you imagine where Bitcoin's going to be at during that same time period? So I think we might be getting ready for another bull run here. We'll just have to see in the next couple of days. And it's an interesting market we're in right now. Next news, BitPay adds Litecoin to expand coin integration. BitPay, the world's largest provider of Bitcoin and cryptocurrency payment services, today announced support for Litecoin, the BitPay wallet app. Consumers can buy, store, and swap crypto in addition to buying gift cards safely and securely starting this week. Businesses using BitPay are expected to be able to accept Litecoin as payment method from any wallet. Newegg.com will become the first merchant to accept Litecoin through BitPay, just as it was the first major e-retailer to accept Bitcoin for purchases back in 2014. So this is great news for Litecoin, obviously. The more acceptance we have in places, the more it's going to be used, the more it's going to be traded, the more the price should go up on it. So, I mean, right now, everything is down today. Look at Litecoin again. It is down, but if we look at the daily chart, obviously, we're still down from the highs where we reached almost $400. I did reach 413 in the highs. But over the year, if we look at from December to 2021, we're still above for the year. We started out at about $71 for the year. A little bit more than that. Let me see here. January 1st, right there. So we're 124. So we're pretty much where we started off the year at. So we're not doing too great. Year to date, we're up 10%. One month, we're up 1.75%. 3 months, we're down 22%. And 6 months, we're down 25%. So Litecoin has a long ways to go to get above those ranges again. We'll see, just like Bitcoin and everybody else. It's kind of up in the air right now as far as which direction it's going to go, but I do think we're going to go up. We may go down a little bit more in the meantime. And finally, the biggest story, I think the most important story that I found here was, and the most interesting one was from Bitcoin Magazine, 6 reasons to withdraw your Bitcoin from exchanges. I found this was to be fascinating and quite enlightening. So I don't keep my coins on any exchanges. I buy on the exchanges and I go put them back on my Ledger wallet. I would recommend you guys do the same thing. I didn't think about all these things when I was doing it, but I just wanted to have my coins on my wallet, not on somebody else's wallet. But these 6 things are really, really fascinating and interesting to think about. So number 1, if your coins are on an exchange, you need permission from the exchange to spend them. In your own custody, you can do whatever you want and pay whomever you want, whenever you want, and the fee for that, whatever you want. Excuse me, my throat's getting dry. So there's a lot of truth to that. You know, when you sign up with an exchange and you leave your coins on the exchange, they're basically just promising you that you have access to those. But there's things that are beyond sometimes their control, or they get hacked, the government seizes them, or whatever else could be. So you really should move your coins off the exchanges. If you're on Robinhood, you're kind of stuck there, unfortunately. There's not much you can do about it. Robinhood has been saying for the last 2 years that they're going to allow people to move their coins off the exchange, and they still haven't done that. So tread lightly and tread carefully with Robinhood. Number 2, your coins might not really be there. What you see is a promise that if you ask for your Bitcoin, they will give it to you. But if the exchange gets hacked, or if the CEO fakes his death, which has happened, and takes the private keys, or if the government steps in, all the coins could go bye-bye. So this is crucial to understand the right here. The exchange just has a legal agreement that the Bitcoin belongs to the user, and they show the user their balance. But the user just has a login name and a password and a promise, not the private key. The private key here is basically the key that really holds the Bitcoins. You don't have access to it, so it's theirs, but they have a promise to you that they're going to give it to you, and when you want to sell it, if you want to trade it or whatnot. So I thought this was also interesting here. A little sinister trick that blockchain.com employs is a 24-word password to log into the website. This looks like a Bitcoin private key, but it is not. It is just a website password. Blockchain.com has a private key. This is quite misleading and confuses the beginners as to the true nature of how Bitcoin works. Many exchanges have been hacked and coins have been stolen from those exchanges. The one that's most famous is obviously Mt. Gox, is the first and most famous one that got hacked. This was a couple years after Bitcoin came into existence. Quadriga CX, a Canadian exchange, went bust after the CEO, the only person in the company with access to the private keys, died while on a trip to India. The users lost all their Bitcoins. Cryptopia, an exchange in New Zealand, they got hacked and users lost their funds. Binance, 40 million worth of Bitcoin was stolen, but Binance was wealthy enough to make their users whole, which was correct and good on their part. Embarrassingly enough, though, the CEO called for a rollback of the Bitcoin blockchain to recover lost funds, but was laughed out of town. Yeah, I remember when that was going on. People were like, "You're crazy. We're not rolling back the blockchain for you so you can save the $40 million for being hacked." It's not going to happen. Most recently, the CEO of a Turkish exchange fled the country with $2 billion worth of Bitcoin. There have been many other instances where this has happened. So, excuse me. There is no way to tell if an exchange really got hacked or if it was an inside job from a rogue employee. The bottom line is, if they hold your Bitcoin, you are trusting them to act honestly and safely. And there's no FDIC insurance with this. There's nothing. It's basically their word to give you your Bitcoin and hold them safely. So do your own due diligence. Excuse me. Keep them off the exchange. If you're going to trade it, send it to the exchange, trade it, whatever you're going to do with it, pull it back, bring it back. I highly recommend Ledger. I've been using Ledger for the past, now 4 years. I've never had any issues with it. It's worked out great. Ledger's not sponsoring me or anything like that, so you can use other ones if you want, but that's just what I've been using. Number 3, if coins are left on the exchange, they can engage in fractional reserve lending, effectively inflating the supply of Bitcoin. If there's a mass withdrawal by the public, exchanges can and have gone bust if they don't have the coins that were promised. Coins go bye-bye. So this is where you're talking about margin and things like that. So if you put it on like BlockFi will give you basically an interest rate for leaving your coins on basically their exchange or their system, and what they do is they lend it out to other people to basically use margin on Bitcoin trading, things like that, loans, other things like that. So then that number of Bitcoins that's out there can actually be, so if you have one Bitcoin and they lend somebody else your Bitcoin one more Bitcoin, so now it's basically like there's 2 Bitcoins out there, right? So you got to be careful with that, and it is kind of interesting what they say here. So fractional reserve is a fraudulent practice for accepting a deposit and then lending it out, but the depositor is given the illusion that their money is still available. Somehow this is both common and legal in the fiat banking world. If one Bitcoin is deposited and then is loaned out, the depositor should not have access. Similar to a term deposit, this would be a full reserve or one-to-one banking. If the depositor requests their funds when what is returned to them is another depositor's funds instead. And in theory, no one is hurt. But if many people want their funds at once, then the obligations cannot be fulfilled. This practice not only inflates the supply of money, but is a systematic risk. By withdrawing your coins, you eliminate the risk to you of a Bitcoin bank run. Trace Meyer, a once loved Bitcoiner, started Proof of Keys Day on the anniversary of the first Bitcoin block, January 3rd. It started a movement where Bitcoin users celebrate by withdrawing all other coins from exchanges, all at the same time, putting stress on the system. To keep the exchanges honest, any exchange that was running on a partial reserve could be exposed if enough people participated. So I actually, this year I did that. When that was going on, Proof of Keys Days, I pulled all my coins out of the exchanges. Number 4, on one day, governments may outlaw withdrawals to private wallets, leaving your coins stuck and vastly less valuable. The real Bitcoin economy would consist of the open peer-to-peer market outside of the exchanges, while the coins trapped inside the exchanges would be useless. So this writer is fully expecting governments to make it extremely difficult to or outright ban coins from leaving exchanges into private wallets. We will fight back, no doubt, but the effort by governments will be futile. Most Bitcoin is not on exchanges. My estimate is that about 2 million coins of the 18.7 million mined are on exchanges. We also have a lot of coins that are just gone, lost keys, lost private keys to those. They're just gone. So that number seems okay to me. Seems a little high. Well, kind of low maybe even. I don't know. I have to look into it some more. Bitcoin's future is a peer-to-peer money with most payments made on the Lightning Network. Coins on an exchange cannot serve this function. Exchange coins will always have a middleman that you will require permission from to make payments. A coin stuck on an exchange due to laws cannot be used as Bitcoin is intended, and they will be less valuable. If I offer a service and charge in Bitcoin, I will only accept real Bitcoin outside of exchanges. I will not take payment from the trapped Bitcoin to my exchange wallet. I will not be alone. Therefore, there will emerge a price difference between real Bitcoin and IOU exchange trapped Bitcoin. I don't know, that's a kind of interesting premise there. I don't know how I feel about that, but as far as governments, trapping your coins on exchanges and not letting you pull them out. I mean, we kind of have the same thing right now with stock market, where you buy stocks, your stock certificates are basically held by the exchanges, and you can't pull them out, I don't think. I'd have to do some more research into that, but that's kind of interesting. I don't know if that would actually happen. Number 5, powerful people who want Bitcoin to fail may be naked shorting it on futures markets. If we, the resistance, buy Bitcoin and extract it from the trading pool, we will eventually enforce a decoupling of the price of paper Bitcoin versus physical Bitcoin. So yeah, I agree with that. Naked shorting has been an issue on Bitcoin, especially with when you see the price of Bitcoin drop from 60,000 down to 28,000 in a matter of a week or so. That's a lot of people are shorting it, and they're shorting it on leverage. So we'll see. So he writes, we are fighting the people who print fiat. It's easy for them to naked short Bitcoin and suppress the price because they can print money and therefore have no real risk. Here's why they'll fail. There is an army of Bitcoiners, true believers, who are regularly buying Bitcoin and withdrawing coins from exchanges. Most of the coins are off exchanges already. If the naked shorts attack succeeds in driving down price, Bitcoiners will eagerly scoop up the cheap sats and remove even more Bitcoin from the exchanges. We are seeing that. There was a story yesterday about how there was a record amount of coins being moved off exchanges. So people are looking for basically a price rally in Bitcoin. Number 6 is, unless you take coins into your own custody, you will never fully appreciate how Bitcoin works. Yeah, I think that's the fundamental part of Bitcoin, is you got to have your own private wallet. That's your money. It's your asset. It's yours. Nobody owns it. The government doesn't own it. The exchanges don't own it. You can buy it on the exchanges, but all in all, it's all yours. So I think you guys would benefit from doing this. I think that the whole group as Bitcoiners would benefit from everybody doing this, putting it on their own hardware wallets. So I think there's a lot to say for this article. I think there's a lot of good stuff in here that I didn't even think about why I kept my my own coins on my own wallet. But it's here for you guys. I hope you guys liked it. That's all I have for you guys right now. Let me know what you guys think about the 6 reasons in the comments down below. If you agree with them, if you don't agree with them, if you keep your coins on the exchanges, or if you actually have them on your own hardware wallets. So until tomorrow, guys, or actually tomorrow, Saturday. I won't see you guys Saturday. Maybe I'll create some kind of video for something more in-depth instead of this daily morning updates. But otherwise, if I don't do anything for you guys tomorrow, I'll see you guys on Monday with an update on what's going on with Bitcoin and everything else. Otherwise, have a good weekend, guys. I'll see you all on Monday. Bye.